Can a personal loan hurt your credit score? Many times people take personal loans for all kinds of different reasons, and they don't realize that it actually can cause problems. In this video, we'll learn all about how personal loans affect your credit. In this episode, we're going to talk about personal loans, how they differ from other loans, and if it's the right fit for you. I'll share some scenarios where a personal loan may make sense for you, and I'll share some scenarios where it may not make sense. Lastly, we'll look at personal loans and if they help or hurt your credit. What is a personal loan? A personal loan is usually going to be an unsecured loan that is written up and no collateral is required. Sometimes we call them signature loans, meaning that the loan is written up based on the client's signature and credit standing only. Based on a study done by Experian, personal loans are the fastest expanding form of debt. When you get a personal loan, you can literally use it on anything that you'd like to use it on. There are no restrictions. You can use it to consolidate credit card debt, to start a new business, or even just to help make ends meet. So are you able to get a personal loan? You can get them pretty much anywhere. You can get them from a traditional bank. You can get them from a fintech company. You can get them from numerous online resources. Personal loans are everywhere, but beware, a lot of these personal loans are actually not good deals at all. A lot of these personal loans are what we call subprime loans, and they're gonna intentionally target subprime borrowers, which means that if you have credit challenges or if you have credit issues, they're gonna target you at a very high proportion, and they're gonna make these loans look like they're actually good for you, but they're really not. So a personal loan may seem like it makes good sense, but you really have to ask yourself, does it actually make good sense? So you've got to look at the reason that you're actually taking the loan. In many cases, there is good cause to take a personal loan. As an example, to pay for funeral expenses, to pay for a medical procedure, or perhaps you have big expenses that are coming up and they're significant and you need to take a personal loan to cover those big expenses and your credit cards can't handle that level of expense. So what if you want to take a vacation or you want to improve your home, buy some new furniture? What if that is something that you're taking out a personal loan for? The rule of thumb always is when you're trying to evaluate, does it make sense for me to take out a personal loan, is do I have the time to save to pay that thing? Do I have time to save to buy new furniture for myself? I've already got furniture. Of course you do. Do I have time to save if my AC unit went out and I'm in the middle of Texas in August and there's 105-degree weather outside? Probably not, right? You probably are going to have to finance that situation. Before we get into how a personal loan affects your credit, please like this video and subscribe to my channel. I'll be working hard to bring you a video every weekday over relevant personal finance topics. So how does a personal loan affect your credit anyways? So it really depends on how you're going to use it. Let's say you have credit cards that are maxed out and you take a personal loan to take a vacation. You've essentially just added more debt to your credit profile. Now, make no mistake about it. Adding a personal loan to your credit profile in and of itself is high risk. I don't care how good your credit is. If you are taking more money in addition to the money that you already make, that's considered a high-risk move anyways. So maybe you have credit cards that are all maxed out and you're going to use that personal loan to wipe out your credit card debt. In that case, you will see an increase in your score. And the reason is because you've just lowered your credit utilization probably dramatically. Let's say your credit cards were at 100% utilization, meaning that they're all maxed out, and you just cleared that out. Your credit scores are going to increase dramatically. Now, here are some more negative impacts to taking out a personal loan. The first issue is that it creates less disposable income in your budget. Let's say you have a budget and you had $200 or $300 that was left over in that disposable income. Now you've taken out a personal loan and your monthly payment is going to be $200 or $300, which could leave you with nothing after you use that personal loan to pay off whatever it was that you wanted to pay off. And also personal loans, depending upon your credit standing, can actually have a lot of fees, origination fees, just kind of junk fees built in, high APRs. So there can be some wasted money that happens just by taking a loan. Now, if you find yourself in a situation where your credit is challenged or you need help with your credit, please click in the link in the description below. Here at Creative Credit Solutions, we complete a complimentary credit analysis. The only catch is that you have to buy a smart credit report, as that's the report that we use to complete that analysis with.